So there are serious issues in terms of several inhibitors. Obviously, as we've discussed, macroeconomic is a key driver for appliances. But it's not really just that. Sometimes you'll see savings ratios coming into it. So where is the savings ratio going to be driving, 2010 consumption? So at a time when German consumers dropped 0.3, 0.4, French consumers increased 0.3, 0.4. So there's actually greater potential for French consumers to consume more than they were last year, this year, because of that factor. But then you've got a lot of issues, for example, demographics, household profiling, household size. So the worst affected market last year was Russia, and it really dropped very, very heavily. It's about 30% in unit volume terms. It really, it was quite catastrophic. Consumers basically stopped buying. There was so much risk that unemployment was obviously driving up very, very highly as well. But consumers just basically, with about 15% savings ratios, decided to just stop consuming. So you have an increase there. But it's the aging demographics of Russia which is such a problem. Actually, if you have a look over the next 5 years, it's got a very elderly population. So it's quite heavily skewed that way. Whereas if you have a look at, say, for example, the Philippines, or you look at India, or any of these emerging markets, or Saudi Arabia even, they actually have a lot of consumers in a base between about 20 and 30 years old. And that is actually going to drive appliance consumption or electrical goods consumption, for example. So they're the people who are going out, they're acquiring new properties, they're acquiring new appliances, and that will drive sales. Whereas you look at Russia, there isn't that. There isn't that key driver. It will grow heavily over the next 5 years, but that's because it dropped 30% in 1 year. So there is a lot of growth within Russia, but by 2014, it's going to get back to 2008 levels. So that's actually a very long time to get back to where it was actually selling in the first place. 2010 will bring a year of indifferent growth again. We're not going to see the obviously declines we saw in 2009 by obviously a long way, but we are going to see not a return to pre-2008 growth. The markets are still correcting themselves. There's still a lot of problems out there. If you have a look at the US, for example, a very key driver of global growth. So there are serious issues in terms of real GDP growth. Unemployment is obviously a big key issue in a lot of major markets. If we look at Spain is still, unemployment is still increasing at the moment. It's still higher than it was in 2009. So there's a lot of problems really within the global market in terms of how much consumers are feeling secure within their jobs, secure within the global growth. So I think we'll see a lot of the developed markets still suffering. We'll see, maybe 1%, 2%, 3% growth would be strong, to be honest. Whereas we'll see a lot of growth still within the Asian markets. They didn't suffer as heavily during 2009, and they're in a much better position to actually take advantage of growth. And the companies as well. If we have a look at global market share, a lot of the companies positioned within Asia will be able to take advantage, and they're increasing share. So we have a look at Haier, for example, as we were talking earlier. They actually became the #1 brand in unit volume terms in 2009. That was because they were selling into rural China, so they actually increased above Whirlpool. In company terms, Whirlpool is still a lot higher because they have a much larger brand portfolio. But you can see, purely looking at that company, they took advantage at a time when everyone else suffered. So we'll see growth within Asia. We'll see a couple of the Latin American markets outside of Brazil, which actually performed relatively okay during 2009, beginning to get back to relatively okay performance. But yeah, 2010 will be pretty tough, I still think.